What's up, guys? You will not believe the discovery I just made. I always thought I needed to wear a shirt in order to use this microphone. Turns out I could have just put it on my chain this whole time. There goes all of those days where I was sweating my balls out because, I live in Asia and it's really hot here. And I had to put on a shirt because I had to record. But anyways, let's get into the video today. Just to kick things off, the scenario that I talked about last week didn't quite happen because even though we tapped into the fair value gap, there was no CISD towards the upside. I also posted about this on Twitter. If you'd like to just get more live updates as they go, then feel free to follow me on Twitter at _theothercrypto. But otherwise, we are sitting at a cool 82 wins out of the last 97 calls on YouTube since February. So this is all publicly tracked. And for just the last week's situation, and for the trade that I called on last Friday, it's just, that just didn't happen. So I don't think that was a loss. Don't think that was a win either. So we're just going to call it as no trade. In fact, this was recommended by you guys from reading the comments. There are a lot of situations where it's just a no trade and doesn't feel like it's a loss. Definitely not a win either. But anyways, let's get into Bitcoin today. So first of all, new all-time highs. Love to see it. Second of all, you get a bullish weekly close last week, which also means that this week, the PO3 direction should be towards the upside, right? Pretty straightforward so far. Now, going back down to the daily chart, you also got a bullish weekly close on Sunday. And starting today, well, it's just been very aggressive towards the upside. You can see that a lot of this movement is being driven by the Asia session, which means, who knows, maybe the Chinese buyers are back in the market and they are the ones driving the market towards the upside. But today, the setup is going to be pretty straightforward in the sense that you are going to get a retracement into either one of these fair value gaps, and then you are going to head towards the upside. Okay, very simple. And when we go into the lower time frame charts, this is going to make a lot of sense as well, because this red box here is your Asia chart. And I do apologize if the screen is looking very laggy. The Wi-Fi today has not been the best. And yeah, anyways, this is Asia. For those of you who know anything about the Asia session, it tends to be accumulation. We usually wait for the entire Asia session to play out first before we consider any other trades, because, well, if we break above the Asia high and we hold the Asia high as support, then that means today is going to be a potential A, B, B for breakout, and then C continuation during the New York towards the upside. And then secondly, if you get a sweep underneath the Asia lows to fill in some kind of key level, or maybe just sweep out liquidity, that would also be a Asia manipulation and the New York distribution. So far today, it looks like Asia has been broken out of, and the price has been trading above the Asia high for the majority of London so far. Now I say majority because it is not over yet. It is currently 4:15 as of the time that I'm recording this. Ideally, I would like to make this video a little bit later, but today's a rare day where the setup is pretty clear. And so all you look out for is for all of these relatively equal lows on the lower time frame here to get swept out, for this fair value gap to get filled, and the price is going to head towards the upside. And speaking about upside, I just want you guys to also remember one thing. If we draw a fib, right? This was a fib that we drew last week when we were talking about swing trading. From this high, basically, to this low, this was the previous bear market high, and this was the previous bear market low. If you expand it towards the upside in negative standard deviations, just understand that standard deviation expansions are kind of like what the algorithms are programmed to deliver price to. There is a reason why, for example, if you come from a more traditional camp of technical analysis, people tend to talk about a golden pocket retracement or potentially a Fibonacci expansion. So the 1.618 extension tends to be kind of like a magic number where price, especially if it forms a new all-time high, it will, kind of find its top at around negative 1.618. That's a more traditional camp of kind of like TA. Now, if you come from the smart money camp of things, you understand that the algorithms that deliver price tends to go for standard deviation numbers. So, fun fact, negative 0.5 and negative 1 is not a Fibonacci number, it is more of a standard deviation number. And so right now we are quickly approaching the negative 1 standard deviation expansion. So look out for price to kind of like stall once you get around to this level, kind of like what happened when price got to the negative 0.5 level and $97,000, and it kind of just chopped around, went for a little bit of a retracement before the move continues. Now, I'm not saying that this will 100% happen, but it is good to keep this in mind. The markets is, at the end of the day, a probabilities game. I can kind of give you some things that are likely to happen, but just don't take them as kind of like gospel and expect them to happen 100% of the time just because I said something about it. Now, while I do have a pretty good hit rate, historically speaking, about 80% win rate, I am still going to be wrong sometimes. So going back into the chart, just understand that we are quickly approaching this level. Overall, you are still looking pretty bullish. And in terms of the 1 hourly chart, let me just break down the fair value gaps real quick, because I realize I completely skipped over this step. When you get a bullish daily bias, right? Because yesterday's candle closed bullish, today we are also looking for bullish trades. When you have a bullish daily bias, you go into the 1 hourly chart and find areas of interest. In this case, they will be PD arrays, which means they're either going to be fair value gaps, as shown in this example here, or they could be order blocks. Now, in this case, the reason why I'm not taking into account the bullish order blocks is because that's just a bit too low, right? We're not expecting Bitcoin to retrace $4,000 within the same day and to also bounce towards this target. This would make much more reasonable sense. And this, still kind of makes sense if you were to retrace all the way down to 120,000. Like it still makes sense, right? For a bullish continuation. This one would be ideal. And it also just happens to pair up with our analysis of the Asia session, where this is most likely going to be a ABC kind of day. Specifically, what you want to look for this day is for price to retrace into this level between the hours of 7 a.m. to 10 a.m. New York. You could potentially, just judging by how price action is playing out at the moment and how close we are to this level, you may hit this in between the hours of 5 to 7. And then what will likely happen is that from the hours of 7 a.m. till 9 a.m.-ish, you're going to get a bullish change in state of delivery. All you want to look for is for a candle body close, right? People that come from, if you come from a more traditional camp of technical analysis, just understand that this means a change of character, if you will. So if you see a change of character happening after sweeping out these lows at specifically the timing between 7 a.m. to 9 a.m., then you are able to wait for a retrace, place your stop loss underneath the recent low that is formed, and just target for 2R. And if you want to leave a runner, in the case, well, just in case Bitcoin actually hits 125,000, as I've kind of been predicting on and off, in the event that Bitcoin hits 125,000, then at least you have a runner set for that. But otherwise, you already secured your 2R and you have a good trading day. Now, the reason why I'm recommending 2R in the first place is because today there is no news. For those of you who have watched, or rather follow me for a while, you'll understand that I am a big fan of trading on news days. Not only is the price action much more, how do I put this, clean, in the sense that, we've all learned smart money concepts, we know order blocks, we know fair value gaps, we know premium discount and all this stuff. But the big struggle that a lot of people face is that they find the probability of these fair value gaps or order blocks or these concepts in theory, or just these concepts in general, it's not as high of a win rate as they were promised. Now, the reason for that is because the market, or rather when it comes to price action, it's not just about doing technical analysis. It's more so about the behavior of price at certain timings. And the timings are very crucial. At certain timings, these theories are going to be much more likely to get respected, and at certain timings, not so much. In news days, this kind of price action, also just your general understanding of smart money concepts, is going to play out in a much more clean fashion. So look for news days to take the majority of your trades. For this week, it's going to be Tuesday, Wednesday, and Thursday. Tuesday, we have CPI for the USD. Wednesday, we have CPI for the GBP. So for those of you who are trading Forex, just know that this week is going to be an absolutely amazing week for especially your Euro pairs, like, the Euro, the Great British Pound, and so on and so forth. So again, today is a non-news day. We should treat this day as it is, which is a slightly lower probability day, although price action is still showing very, clean movements, as well as the fact that you have a lot of volatility today as well. But just in case, take your profit at 2R and then leave the rest as a runner. And also just understand one other thing. Right now, you are in very strong trending conditions, which means that until this trend is over, okay, you are going to continue playing the market really aggressively. The biggest mistake people tend to make is that they go way too aggressively in just kind of ranging market conditions, and they do not go aggressively enough on trending conditions. Big differences: when you are trending, price moves explosively, right? It usually even goes much higher than you would predict. Case in point, last week, I kind of predicted, move of a couple of $1,000s, and the price eventually ended up going $10,000 instead. So that was my mistake, I admit it. That also brings the point home, which is right now you're in a trend, and so it's okay to set your target a little bit further, take some profit, and then leave the rest as a runner. That's the way that I usually do it. Just understand that, this trend is not over. You're in a very strong bullish trend. And for those of you who are thinking about shorting the markets, forget about it, right? I don't know why there is this tendency for people to, want to catch the top or to catch the bottom. But if there's one saying that is my favorite saying in all of trading, is that top pickers and bottom pickers eventually end up as cotton pickers, because in this case, you are shorting into strength. And in the case where you are trying to catch a low, you are quite literally buying into weakness. It's way better to just trade what the market is telling you. In this case, the market is telling you that it wants to go up. It is in fact going up. And so you just trade accordingly, right? Just keep going long on this thing until you eventually reach a point where you start ranging. And once you range, and for example here, you get some change in state of delivery, you get some breaks of structure. At that point, it is never too late to start going short. But just understand that both on the weekly chart, the monthly chart, the daily chart, the hourly chart, the 5-minute chart, whatever chart you're looking at, it is incredibly bullish. Anyone that is telling you to short Bitcoin, I saw a comment last week even saying like, apparently my analysis to just go long ended up, beating out a few of the paid groups that he was in who were telling him to short. Ultimately, he took my trade instead of those paid groups. But just go to show that there's a big difference between, what you think you want to see in the markets. Some people think that Bitcoin's a bit too expensive right now, versus what the market is actually trying to tell you. In this case, the way you have trading success is to see the market for what it is and trade what the market is trying to tell you. But otherwise, guys, we have, I think, one more spot remaining in Bootcamp for this intake. If you would like to work with me one-on-one to get funded within the next 60 to 90 days, feel free to click the first link in the description box below. You have seen the 80% win rate based on the public track record. If you would like this system for yourself as well, you know where to go. Otherwise, I'll see you in the next one. Bye-bye, guys. Yo guys, I'm realizing now after finishing the video that I forgot, like in my haste to record the video, I've missed out on one other potential scenario, which is the fact that on the 1 hourly chart, because you have a candle close above this order block right here on the 1 hourly chart, it also means that you may or may not sweep the liquidity and you will just go straight up basically. Like as you can see, price retraced. If you form a new high here, then just use this new order block as kind of like your area of interest. Again, like I can give you guys the points of interest. Hard to say which one is going to be the one that gets hit. So just going to prepare you for whatever scenario happens. And in this case, yeah, now I'm going to get back to drinking my raw milk and enjoying my cigar with this beautiful sunset. Later, boys. Have a good one. Ciao, ciao.